Further evidence of a soft economy. Home loan rates set new lows this month. The average 30-year mortgage rate fell to 4.44%, the lowest since Freddie Mac records began in 1971. So no time like the president to refinance your home, right? Not so fast. Even people with great credit are having a nightmare of a time securing a loan. Vicki Mabry takes a look at what you need to know to score a loan in tonight's Realty Check.
When Brian and Suzanne Hernandez were shopping for their first home, they thought they'd be a lock for a mortgage. She's a school teacher, he's a personal trainer and owns a gym. So they were shocked when they were denied.
You know, we've been working for 4 years of our marriage towards getting our first new home, and when we finally were ready to do that and we went for the mortgage and we were told we were denied, it was just heartbreaking.
I thought it was going to be easy, you know. I've leased cars, purchased cars, have great credit score. I always get like tier 1 credit, you know. I've never been late on a payment for anything, school loan or any type of business loans. Everything's always been on time. So I thought it was going to be an easy process. 3.
Gone are the days when you could declare your income and the bank accepted it. So Brian had to prove he earns every penny he claimed. But it's not just the self-employed like Brian Hernandez.
You just want me to sign my name?
Sure, just like it is on the front of the check.
Okay.
Yeah.
Sudhir and Maria Bhatia of Chicago both have good jobs. He's a dentist, she's a teacher. They also have good credit. But it still took them 3 tries and a year and a half to refinance their home.
There's a lot of paperwork that you have to go in between, and you have to go here, go there, and pick this up, and you need that stamped, and it's like just a lot of other paperwork just to get to this part of the process.
In many cases, you can be the most squeaky clean borrower around. Banks are once bitten, twice shy after the housing market free-for-all that almost tanked the economy.
The main thing is that the abuses of 3-4 years ago have reverberated, and now people are tightening up too much on the other side.
Michael Moskowitz, owner of the lending company Equity Now, says with lingering uncertainty about the economy, banks are quick to say no.
I think it's only natural. I mean, they're basically looking at, they woke up from the bubble that happened 2.5 and 3 years ago, up until that time. And they're looking at a house that's worth today $500,000. They're concerned that it's going to be worth $450,000 or $440,000 a year or two from now. And they're making their underwriting decisions based on that.
So this good faith estimate you receive within 3 business days of us receiving your loan application.
Brian and Suzanne were able to buy their house, but not without jumping through some hoops. Mortgage broker Dale Robbins Siegel helped them navigate the rocky lending landscape.
She organized me. She asked me specific information. She asked me how long I've been in business. She ran my credit. She took me through all the steps. She put everything in order. She basically cleaned my credit. I had good credit, but I had some things that were outstanding from the past.
The most perfect of perfect people still, as we say, get, thrown into it, and we tell them right up in front that they're going to sign 50, 60 documents before they even get to the closing table, that they're going to have to continuously give us more pay stubs, more bank statements, more explanations throughout the process. And if they understand that, they just have to work with it, then they do.
It's ironic that just as rates have plummeted to levels not seen since the 50s, getting your hands on a loan has gotten harder than ever. If you had locked in today, you'd be looking at less than 4.5% for a 30-year fixed loan. Compare that to August of 1981, when that same mortgage came with an interest rate of more than 17%. So how do you do your best to qualify for a loan these days? Dale Siegel has some tips. Number 1, have your credit in order.
The banks look at a minimum of 620. The better your credit score, the better your interest rate.
Number 2, have a steady income.
Steady employment, and they also look at your employment in the future. Are you in a job where you might be let go, which is a big thing now.
Number 3, watch your debt ratio.
Debt to income ratios are much lower now, so a lot of the banks cap it at 45%.
Number 4, have a down payment up front and extra money in reserve.
Fannie Mae requires a minimum of 5% down. So when you're buying a house, it's good if you have your down payment, your closing costs, which you know ahead of time, could be a couple thousand, could be 10, 20, it doesn't matter. And they want to see that you have a couple of months left over post-closing reserves.
Number 5, be prepared.
It's a very different world in real estate. Values are, I believe, still going down or could continue to go down. There's a lot of homes on the market, there's foreclosures, and it's scary. So I just think the key to everything is just to be educated, take a class, read a book, do something.
If your credit's not the best, Dale has tips on fixing that too.
Keep what you owe on a credit card below 50% of your high credit available. In other words, if you have a Visa card that has a high credit of $5,000, you can borrow up to $5,000, never go above $2,500.
Some question why banks who took taxpayer money in the bailout are now slow to lend that money to people who need it. Michael Moskowitz says banks are getting back to traditional standards.
There are a lot of concerns about real estate values still going down, and I think that's one of the main factors that drives the tight underwriting guidelines.
So, baby's due in January.
Yes.
Brian and Suzanne are expecting their first baby. They got into that new home just in time. This is Vicki Mabry for Nightline in Fort Lee, New Jersey.